Welcome to the Cryptoverse DAO and to another Monday edition of the Crypto News. We're going to be taking a look at the headlines from, I would say the week, but it's the start of the week. It's Monday. Let's take a look at what's been going on. A legal officer from Grayscale has said that Bitcoin ETF litigation could take 2 years. Grayscale argues that the difference between futures and spot Bitcoin ETFs have no correlation to approvals because prices are based on the same spot Bitcoin markets, right? So asset management firms continuing to fight for a spot Bitcoin exchange traded fund or an ETF in the United States, while regulators in the United States remain skeptical of the idea. The chief legal officer for Grayscale, Craig Somm, he discussed the firm's lawsuit with the U.S. SEC regarding the conversion of Grayscale Bitcoin Trust, GBTC, into a spot Bitcoin ETF. So Somm explained the basis for Grayscale's argument against the SEC while answering the most asked questions regarding the lawsuit. According to the legal officer, the SEC's denial of the spot Bitcoin ETF separates futures and spot trading for Bitcoin ETFs and draws a clear distinction between the two. Grayscale, on the other hand, argues that the differences have no correlation because prices, no correlation to approvals because prices are based on the same spot Bitcoin markets, right? So the Grayscale legal team believes that the disapproval of spot Bitcoin ETFs amid the approval of Bitcoin futures ETFs can be considered unfair discrimination. And Somm goes on to claim that this violates several laws, including the Administrative Procedure Act and the Securities Exchange Act of 1934. After explaining Grayscale's arguments, Somm also answered the most common question amongst those following the lawsuit's developments: when will a spot Bitcoin ETF finally be approved? According to Somm, there's no certainty about the exact timing. But, like you saw in the headline, it could take 2 years. Is what the estimation is. Despite the potential length of the lawsuit, Somm says Grayscale firmly believes in its arguments and is positive that the courts will rule in its favor. When Grayscale launched its legal challenge to the SEC, community members rallied behind the firm. Many were disappointed with the decision to disapprove the spot Bitcoin ETF while approving an ETF that shorts Bitcoin. A Twitter user alleged that the SEC's move aims to suppress the price of Bitcoin. And are we even surprised anymore, guys? That's the kind of sauce on Grayscale and what they're saying about Bitcoin ETFs, and the SEC back up to some quote unquote unfair discrimination. The next thing we want to talk about is U.S. inflation breaking a 40-year record. We're at a 40-year high, a 4-decade high, and the question of whether Bitcoin could serve as a hedge asset. Many have likened BTC's anti-inflation properties to those of gold, the resistance to inflation. There have been comparisons drawn, but there are important differences, kind of key distinctions between the two assets that do need to be made, that do need to be recognized. So Feb 9th, right? The United States Bureau of Labor Statistics reports that the Consumer Price Index, which is a key measure capturing the change in how much Americans pay for goods and services year by year, this price index has increased 7.5%, increased by a factor of 7.5%, compared to the same time last year. And this has marked the greatest year-on-year increase since 1982, since 40 years in the past. Now, in 2019, before the pandemic, the indicator stood at 1.8%, right? So year on year, the increase was 1.8%. Now it's 7.5. Such a sharp rise in inflation makes more and more people consider the age-old question: could Bitcoin become a hedge asset for the high inflation times that are to come, or that we're in? I suppose not even to come. We're in the middle of it. So what's the reason behind the inflation spike? Ironically, the fundamental reason behind the unprecedented inflation spike is the U.S. economy's strong health. Now, what does that mean? So after COVID, 22 million jobs were slashed, right? National economic output saw a massive decrease, and the American economy kickstarted a massive recovery, hot off the heels of the relative success of the vaccination campaign. However, supply chains appeared to be unprepared for such a rapid return of business activity, consumer demand, and everything that goes with it. The rebound was fueled. Excuse me, I was about to say the rebound was refueled. Was fueled by the Biden administration's grandiose $1.9 trillion COVID relief package, with the majority of American households receiving thousands of dollars in direct support by the federal government, which is weird because America's the last place you'd expect any type of welfare. But then everyone was walking around with a stimmy, right? The stimulus check. Tom Siomades, that's a cool name, even though I butchered it. He's the chief investment officer at AE Wealth Management. He believes that the stimulus was excessive. This direct monetary support by the federal government apparently excessive given the overall financial conditions of U.S. households. He remarked the 1.9 trillion CARES Act, the COVID Relief Act, in March, when Americans were already saving at a 20% rate, put more money into the economy than it could bear. That money allowed people who would otherwise have returned to work to rethink their options. This created a worker shortage, which in turn led to demand for higher wages, which meant higher costs, higher prices, and it cascades from there. Which I suppose logically does kind of make sense, but there's a lot more that goes into it. I think I don't think you could pin it on just this. But then again, I'm no political expert. I'm no political commentator, so I'm gonna leave my opinions out of it. Some economists point out a more subtle factor. They point out an alarming exercise of corporate pricing power, by U.S. businesses. Producers know that people can pay more, and will be unwilling to accept lower prices for their products, right? So it's like the can of worms has been opened. Pandora's box has been opened. Now that producers know you can charge more, like why would you ever go back to charging less? Now that inflation has become a major political problem for the Democrats, all eyes are on the the Federal Reserve's efforts to solve it. So the inflation wave is likely to gradually fade, if not to pre-pandemic levels, then to at least a more moderate sort of resting average level by the end of the year. Nevertheless, as rising prices are becoming a matter of increasing public concern, private citizens and investment professionals alike are looking around for a hedge asset, a safe haven, and this is where Bitcoin comes into play. With every year that Bitcoin and the cryptocurrency sector become more and more mainstream, the closer we get to mass adoption, the frequency increases of comparisons with gold in terms of a reserve asset potential, or a potential reserve asset, Many observers suggest that Bitcoin could be even more attractive than gold in this regard. So last year, November, the preeminent cryptocurrency was up 133% year on year against gold's year on year 4%, right? As Milton Alt III, founder and executive chairman of investment company BitNile Holdings, so Todd Alt, he observed that in the last 13 years, Bitcoin has massively outdone U.S. inflation, thanks in no small part to the asset's inherent deflationary properties. Right, so Alt comments to Cointelegraph, what makes it a great store of value and a great inflation hedge is that there's a cost associated with mining it. There will only ever be $21 million worth of Bitcoin. There's a finite amount of Bitcoin to be mined, right? So really, still a standard hedge people traditionally think about. There's limited supply, even in the current financial climate, which means it will continue to be in demand. It's all about supply and demand, right? Now, unlike gold, Bitcoin lacks the key features of a predictable, low volatility asset. Maybe that doesn't pose as much of a problem for the diamond hands, like you and me and everyone at the Cryptoverse DAO who believes in Bitcoin's ultimate monetary dominance. But for someone who has invested a significant share of their personal savings as a shield from inflation, that unpredictability, even minor unpredictability, can be freaking scary. Right? So in some sense, Bitcoin's price swings strongly contrast the relative stability of gold, which serves not as a wealth multiplier, but as a preserver of purchasing power. In theory, Bitcoin should make for a good inflation hedge, because there's a limited supply of tokens that can be mined. It's scarcity. Scarcity helps an asset to potentially hold its value over time, compared to fiat currencies. This is what Katie Brockman, I'm paraphrasing, but this is what Katie Brockman, analyst at the Motley Fool, an investment advising firm, this is what she said to Cointelegraph. However, Bitcoin can only be a store of value if a significant number of people find it valuable, right? It's conventional value, end of the day. Brockman adds, it doesn't appear that Bitcoin has reached that stage. While inflation has soared, the price of Bitcoin has plummeted in recent months. It's also fallen at roughly the same rate as meme tokens like Dogecoin, which suggests that many investors perceive Bitcoin as just another bubble, another cryptocurrency, rather than a store, a legitimate deflationary store of value, right? A preserver of purchasing power, not a wealth multiplier, like a regular cryptocurrency, but a preserver of purchasing power. Which, yeah, interesting stuff to be talked about there, but we can crack into that during one of the live discussion segments. Hedge over time. Let's talk about that. So Bitcoin, yeah, imperfect hedge against inflation right now does not necessarily mean it will never be a dominant store of value. But if the currency is to become inflation proof, which is a big ask, it will need to gain both widespread acceptance and a robust mainstream reputation. I feel like we're moving towards both of those things as we speak. But then there are things within the DeFi space that are detractors towards that. End of the day, we all need to be moving in unison towards mass adoption. This is why the Cryptoverse DAO exists. It's a whole thing. Check it out, become a part of it, get into the community, meet some people, have some conversations, because end of the day, we're all swimming towards mass adoption and financial freedom. So it's quite nice. Bitcoin's status will also depend on how investors choose to use it. So public perception, mainstream adoption, widespread acceptance, reputation, all well and good, but also how is it that investors are going to use this so-called preserver of power, or non-wealth multiplier, but just like an anti-inflation, like a hedge asset against inflation. If people are holding their Bitcoin bags as a hedge against inflation, it may not be subject, to the same volatility cycles as you would see in equity markets. But if most investors are trading Bitcoin like they would stocks, then the asset's price could be more correlated with the market's fluctuations. It depends on what people are doing with this asset now that it's in their hands. Are they adding to the volatility? Are they throwing it up in the air and slamming it into the ground and up and down and, adding to that momentum of market fluctuation? Or are they just holding the bag as a hedge against inflation? The future looks bright for the top cryptocurrency, but the timeline is not bright. It's hazy. It's unclear. Alt believes that the volatility may stop at the price of about 2 million USD per Bitcoin, adding that in the process, Bitcoin is expected to become a multi-trillion-dollar asset class. That doesn't make it a direct hedge, but rather a hedge over time. One problem that could become more pronounced in the future is uneven distribution of crypto wealth. As the interest in BTC grows in waves and the entry cost for investment grows rapidly, it's inevitable that large chunks of its monetary stock will concentrate among a limited number of wallets. But that is what happens with any new technology. You will see, honestly, end of the day, what we can do right now as regular folk to kind of prevent a unequal distribution of wealth in, across the digital asset space would be to get as involved in regulation as you possibly can. Exercise your voting power as much as you possibly can. If there's local government, go get involved. Get involved in just get involved in everything, man. And if there is, right now in the UK, there's a 8-week call to action, a call for evidence for policy reform in terms of digital asset. In terms of, it's specifically geared towards the earnings off of staking and mining. It's regulation in that space. But the thing is, it's not being thrown into people's faces. It's not like, hey, we want you to tell us about, during wartime. It's in everyone's face. It's like, hey, we want you. But now that they're writing the rules about an asset that could bring you financial freedom, it's all hush hush. So find out, do the research, have conversations, become active in your community, and speak to people about the wonders of this technology. Don't try to sell people your ugly fucking NFT, because that is a bubble. All that NFT shit, it's gonna I probably shouldn't say this, but it is literally a bubble. But the technology isn't going anywhere. Decentralized finance isn't going anywhere. Borderless payments, transactions, transparency, the blockchain itself, decentralized apps, these things are not going anywhere. They're here to stay. What is going somewhere is pyramid schemes and yield, not, yeah, like literally these the bubble is going to pop. The bubble is going to pop, but the technology is here to stay. And it's entirely dependent on how the masses use it. Read the Bitcoin white paper. It was meant to be used a specific way. Read the Ethereum yellow paper. These technologies were meant to be used in a specific way. And if you use something the way it was meant to be used, that's how you get the best fucking use out of it. And that brings us to the end of the inflation story. Let's move to the Philippines. Let's talk about Binance. They recently signed Kabi Lame, I think is how you pronounce. I'm not sure how you pronounce his last name. But he is the new ambassador. I saw this on LinkedIn, weirdly enough. So Binance is making moves amid all of the contagion from these exchanges and people cutting their employment. What's the kind word? People firing people, basically, right? Binance is redoubling down on their hiring efforts. They're making moves, and this is a story that has popped up with Binance. The Philippine Department of Trade and Industry. There was a proposal for a Binance ban, but they've effectively waved it off. They've cited a lack of regulatory stance on cryptocurrencies from the central bank. And this is so fucking interesting, bro, because this is literally, look at that. Talk about being in the early days. Talk about being in the wild, wild west. A lack of regulatory stance is being cited as a reason to wave off a ban proposal. Completely off the cards is what they say. So let's dig into it. A proposal to ban global cryptocurrency exchange Binance from operating in the Philippines will not gather steam due to a lack of regulation. The Philippines Department of Trade and Industry, the DTI, has cited no clear guidelines. The Bangko Sentral ng Filipinas, BSP, as a dead stop after a lobbying group called for the prohibition of Binance. Let's take a look at this. So why did this happen? Over promotion. So Binance responded to the letter saying they take compliance very seriously and are looking to secure licenses in the country. In the Philippines, Binance is looking to secure the VASP and EMI licenses. We're continuously engaging in discussions with regulators and stakeholders within the country. Our goal is to contribute to the Philippines' increasingly vibrant Web3 and blockchain ecosystem. So this letter has alleged that the crypto exchange Binance has been targeting Filipino consumers with unregistered promotions that are being posted casually on social media platforms. Terry Rydon, the convener for InfraWatch PH, said that Binance disregards Philippine regulations. The exchange performs virtual asset service provider functions without the actual VASP license. Interesting. And that has developed into a question of an outright ban, which the Department for Trade and Industry has just said we've never done that before, so we're not going to start doing that now. We can't enforce any ruling against Binance. According to their latest correspondence with InfraWatch PH, as reported by Forecast, lack of legislation. That's what they've said, creating a gray area. Cryptocurrency and other forms of virtual assets are not consumer products. The DTI has no jurisdiction to act on applications for sales and promotion permits to promote virtual assets per se, in the absence of clear legislation on the matter. Very interesting. This is something I'd like to hear from the community on. Drop a comment. Let me know what you think about this, because this is literally lack of regulation. This is something we talk about all the time, about how fresh and how new the Bitcoin world and the crypto world and all of this stuff is, how fresh this technology is. This right here is a perfect example of just how freaking fresh everything is. Binance is only 5 years old. You realize that? Binance is one of the biggest companies in terms of, crypto. It feels like an established, entrenched company, to me at least. When I first stepped into DeFi, it seemed like it had been around for fucking centuries. And they've only been around for 5 years. They're only just developing a footing in the world. The world as it is structured right now, this world map kind of puts it into my head. The Western superpower dominated global monoculture that we're a part of happened by accident. It literally happened by accident because during the times when they were these kinds of times, citing a lack of regulatory, oh, it's never been done before, what are you gonna do? Everything's clay, everything's malleable, everything is Play-Doh, it's putty. And things just happen to work out the way that they did like thousands of years ago. That's why the world looks like it does today, man. It's just a few changes. Imagine if yeah, actually no, I shouldn't say that on a YouTube video, but like dude, this right here is concrete. Like it's just such a call to action. This is how I see it, man, because if you are an enterprising person or just a regular person with a good idea, this is where you make your mark on the world. This is legacy. This is the next echelon of human existence. This is the next stage of our evolution, of our global society. All of this changes here with the new frontier that is blockchain and space. Space is a new frontier as well. Those two things, space and blockchain, man. That's where all the exciting stuff happens. So let me know what you think. Do you think what kind of regulation do we need? Should it be harsh? Should it be strict? Should it be geared towards the 1%, the elites? Should it be geared towards financial institutions? Should it be geared towards the public? Should it potentially not? What do you think? Let me know what you think about it. And we will follow this Philippine story. We will follow the career of this Philippine story with great interest. As it develops, because I do want to see how they respond, because this is going to be literally, this is something I tell my friends when I talk about the UK legislation, the policy reform that's upcoming. I tell them, hey, what's going to happen is they're going to write up some really strict, straitjacket, no breathing room type of laws. And then every single case calling for regulation or regulatory oversight in the United Kingdom from that point onwards is always going to look back on this starting point to say, hey, we tried to give you guys the right, we tried to give you heathens the right to choose. We tried to give you peasants the option to exercise your democratic rights and tell us what the regulation was supposed to look like. And this is what you guys democratically voted on, right? Like, if not enough people say enough, they're gonna go with whatever works for them, which is, again, I'm getting a little political here, but it's just the importance of it can't be understated, because literally the chain is push through unfair regulation and then continue to point the finger back at the past and say, hey, this is the regulation that was voted on. This is what we're going to use as precedent, because it sets precedence, which is not good. If it's not good precedence, like, just because something is done the way it's done does not mean that that is the optimal way to do it. Just because it's been done this one specific way for 100,000 years, sure, maybe they landed on something, but maybe they landed on the most basic version of a thing, whereby you cannot go wrong. Maybe we've evolved past the need to limit ourselves to the most basic or the most overarching. Maybe we have potentially, God forbid, humans have achieved a state of understanding, appreciating, and applying nuance. Maybe, like, who knows? But we'll have to wait and see. Basically, don't squander your democratic power. Farcical though it might keyword might, it's still exercise it, right? Now the next thing, crypto trying out traditional finances failures in hyperspeed. Oh, that's a good one, but it's gonna be fine. What is going to be the most interesting here is seeing what happens to Bitcoin and the other crypto during these hard times. Okay, so CoinDesk has tried something. Let's see if that catches on. The last time I wrote about a stablecoin, who's this? George Kaludis, a research analyst for CoinDesk. All right, cool. The last time he wrote about a stablecoin, it failed spectacularly. Was it Luna? Please tell me it was Luna. It's got to be. Yes, it's Luna. Come on, George. I ain't listening to a damn thing you got to say. You know what? This is a really interesting story, but I don't have the time to cover it. So let us wrap it up. Let's wrap it up here. Really, really interesting opinion piece from George at CoinDesk, George Kaludis. It'll be in the resources on the Medium article, so do check it out. There's also a secondary article, a price prediction, more likely to hit 10,000 and 30,000. Very interesting. Go read this because this is kind of a prediction that's been made within our DAO as well. So yeah. With all that said, I've been Dharma. This has been the Crypto News with the Cryptoverse DAO. Thank you so much for being a part of it. Enjoy the rest of your Monday. Bye bye.